Welcome to another daily dose of insights powered by Container Exchange. My name is Christian, and every other day we bring to you the key news, stories, and data points that move container markets and hence your business. It's Monday, so we usually do a quick outlook on the week, what specifically economics indicators are coming live that might and will impact container and freight prices this week. This week, it's pretty clear everybody's looking to Switzerland. You would have all read the news about UBS taking over Credit Suisse over the weekend, of course, with a number of backstops and security provisions. For example, in case credit default swaps of UBS widen by more than 100 basis points, then the deal might be off. So there's still a lot of uncertainty around this. But these ongoing crises in the banking sector are now not only contained in the US to Silicon Valley Bank and Signature Bank, but impacting global financial institutions, of course, casts a lot of doubt onto the Fed's and the ECB's rate journey or rate hike journey going forward. The Fed is scheduled for another interest rate decision on Thursday. And the big question is, where will the rate develop from currently 4.75%? Previously, it was anticipated that another 0.5% interest hike might be on the cards or will be on the cards. And now the consensus is more on the corridor between 4.75 and 5%. So all eyes on the Fed on Thursday to see what's coming up. In other news, just a very interesting report that I read over the weekend with regards to the import volumes into the US ports. We discussed also over the past weeks quite extensively the state of globalization, state of supply chains, and the development of trans-Pacific cargo volumes. And the numbers now mirror that discussion with specifically February rates being down nearly 30% year over year. Overall, particularly pronounced with more than 30% on the West Coast and 19% on the East Coast. Of course, the timing of Chinese New Year, of Lunar New Year, had a bit of an impact, but still, even cleaning for that impact, there's still a serious and significant impact. And even more interesting, I think, than this impact overall, which might or might not be transitionary. It's the overarching long trend of cargo moving onto the East Coast from the West Coast. COVID was an accelerator or catalyst. We have the labor union disputes continuing on the West Coast as another catalyst. But the longer term trend is actually pointing at more and more East Coast movements. This started way before COVID, and we now are between 40 and 40% of US import volume being aimed at the West Coast. The question is if that cargo is moving back west once the impact of COVID and the labor union disputes are going away. And more the consensus is that this will not be the case. Importers have now adjusted, have set up distribution centers on the East Coast where most of the consumers live anyways. So there's high doubt on whether this cargo, these containers will actually move back west. That's good news, of course, for East Coast ports and terminals, but heavy investments into infrastructure, of course, will be required to continuously handle that volume without going into further crunches. And crunches, again, have an impact on container prices and freight rates, as we've seen over the past couple of years. Cool. That's it from me for today. Just an overview of the two biggest topics that are moving container markets right now. Very much looking forward to seeing you back on Wednesday here for another daily dose of insights. And until then, have a great start to the week and happy trading. Take care.